and a cool thing that T-Trade showed me, and I think everyone's gonna like. So, all right. Let me know if we're good on YouTube as far as sound's concerned in the YouTube chat. Anyone in there? Then we will get started. I'll make sure to clip all this out afterwards. All right, YouTube's good. All right, so it's really, really simple. It's going to be super stupid simple, actually. The biggest thing I wanted to say first is T-Trades. Anyone that knows him here, he's pretty much like ICT trader. But what a lot of people don't know is what he did is he used the strat to make ICT trading more mechanical with less fluff in between, if that makes sense. Because T-Trades actually came and he was working with me first. He was in college and I gave him like a small part-time job during the day to talk about price action, and he kind of got into trading a couple of years ago. And now he's well surpassed me, which is awesome. I'm happy for him. But that being said, he went more into the ICT side of things. I kind of switched from there and stuck with the strat more so. But he struggled with the strat to begin with, and then when he found ICT, it made more sense to him as far as how the strat is supposed to function, and that's kind of what he built his whole strategy on. He has his own course and all that stuff. So that being said, I just wanted to show you what he showed me, and in a simple way, hopefully explain all of that. So let's get started. The first thing is we know, and before we even get to the charts, we already know what we're looking for. And if you've seen my videos recently, it's really simple, right? We know we're looking for a range, and we're looking for a candle to, or not a candle, but the price to take out the low, reclaim and close and come back into that range, right? And then that is our reversal to look for it to go the other way. And then within this range here, we know if we're going to make this higher high, higher low, on a lower time frame, it looks like the same exact thing, where this is the higher low, then it makes a higher high, then this is the higher low, makes the higher high, and etc. Right? So we're just constantly stopping people out and going the other way is the way we think about it with the strat. So that being said, what does this look like on a higher time frame? This big move that takes a low out and then reclaims it. Well, on a higher time frame, it looks like something like Goldman Sachs from the weekend vid, where you're going to see on the weekly, we have a move down that reclaims this inside bar, right? So on a lower time frame, what does that look like? Looks like exactly what we're talking about. You see your range sideways, and you will see how they took the lows out and then came back into it on Friday, right? And then we look to target the other side of the range, which you can see they blow them out, and that's from our weekend vid. We also knew we had some monthly signals and whatnot, but just understanding that price took out one side and then closed back in right here, this is what we're looking for, right? For 2-2 reversals. It's one of the most common reversals that we're trading. And T-Trades pretty much built his strategy off of this. Looking for this, he calls it a candle 2 closure. But we're just saying that's a hammer, right? Closing back into the previous range, looking to go to the other side. And then the cool thing that he showed me was when you get this big lower wick, instead of messing about with entries within this candle, since we know the next candle is likely to be an expansion like this, right, where it's going sideways, sideways, and then here it expands. Big directional move. We also know that just because we know our signals cause movement, right? Like we've said over and over and over, actionable signals cause movement. So what he does is when we see this big lower wick, he uses the 50% of that wick and he just buys the open. So once this candle opens, he buys it and he sets either an alert or a stop right below the 50% of that wick. Since we have a high conviction that this candle should close like this, given our signal, all we have to do is buy it and hold it and manage our risk there. And this is really, it's super simple. So another one that was from the weekend vid that I said I had my eye on, AI. You can see the same thing here. The big lower wick, here's our hammer, right, for the 2-2 reversal. And he would just manage his risk to here, 23.24, and he would buy the open of the week and just hold all week because we expect this candle, right? Our signal causes that movement. We expect that to happen. And this is simply just on 2-2 reversals. And obviously, yes, are there going to be failures and whatnot? There's always going to be. It's not perfect, but examples there. We can go to another one that we traded yesterday on crude oil. This is another example. You can see I traded some of it today, but the same thing. So close down, then comes all the way back in with the big lower wick. And what he says is that he wants to see price pretty much just respect this 50%, meaning we don't want to see it go back to it. If it does, we want to see that price stay above that or fight to stay above that, right? So really simple stuff. And you buy the day right at the open, sell it at the close, stop goes there. So when it comes to swing trading, I think this makes it a lot simpler for people because it's going to allow you to just, buy it, hold it, and go do your job. So for example, if we go to I believe it's DDOG. So for example, on DDOG, this was the hammer inside bar, and then we look for that inside bar up. So our signal forms here, and we can use that same concept within here. That same exact concept where we can just buy it and look to have a stop down here, which obviously, yes, it's gonna be a wider stop, but then you don't have to worry about it. Like you just hold it all month and let it go, which is what we want to do. We want signals where we just buy it and then hold all month. The next thing that he taught me or showed me was when it comes to the 50% of previous bars, we know Sarah has a 50% rule, and she says like once it's at the 50%, we're looking for that. We can look for that outside bar, but it's not a signal, right? So the signal is not hitting 50% of the range. That's not a signal. It's just if we know we have a bright 2 up in red, if I show you here. It's like, for example, this is the 50% of this range. When it's bright red, 2 up in red here, we know we can go for that to potentially cause the outside day. Now, the thing that T-Trade showed me was actually the opposite of that. How you can use the 50% to gauge, like, is price still going and expanding up or down? Because we know with the strat, like, we want to trade this stuff, right? And what does that look like? That looks like this. We're going to see the 50% of this bar, the 3, we close above it. Then the next day, the 50% of this inside bar, you can see price respects it, we close above it, and they're going higher still. And you can see next day, obviously they respect the 50% of this. The next day, they respect the 50% of this, still going higher. And it's just really simple, right? But it's a way that we can look at it to either trail stops up or set alerts in order to trail positions and enter positions. And you see the same thing in here. So you'll notice we did trade below the 50% of this, right? But this was the gap down, or not gap down, but this was the open, and you can see they go close above it. So still closing above the 50%. And then here you can see they respect it, close above it, and you can see they're still going, which this is actually really cool because what T-Trade was telling me was he doesn't, like most people in the ICT space specifically, they're like, I want to buy in discount. I want to buy when it's going down. And he said something that totally like struck a nerve with me. He was like, everyone wants to buy in discount, and I want to buy things that are not going into discount, things that are just continuing to go. So this is kind of like an inversion of what the ICT crowd is trying to do, because if we're trying to trade these big expansive moves, we shouldn't really come back more than 50% into the range. It just doesn't make sense. If they're aggressively buying, it doesn't make sense to do that. And when it does, it's actually probably reversing, is the thought process there. So when we're looking at this, like we just showed you, really cool. The other thing then I want to show you is how the 50% can act as a level, which is something you can see. This is one that T-Trades is showing me specifically. They're trading it today. And you can see I actually traded the same thing today. So at the end of the day, if it's going up, people will make money long, doesn't matter how you get it. But you can see, so for example, price trades lower. This is the 50% of the previous range. If we think crude oil is still going higher, it really shouldn't come below that. And if it does, we want to see them, you see, defend that. This is an example of that. And as far as the trades I took today, it was pretty simple. You'll see I was not using this 50%. We just had this conversation. But just understanding the sideways, and you can see the poke down and then reclaim like we just talked about, and then boom, take the buy. And then I actually added to the position, then fully exited the position up in here at the high of day. So pretty neat stuff. And you can see how that looks just from a strat point of view. Here's your broadening formation. And then reversal off the bottom to the top, which takes out some exhaustion risk up in here. And they just stay an inside day. The next thing I wanted to show, and this is going to look better on futures. On stocks, it's kind of hit or miss, but it'll work the same way, is the way he was showing me how they do their entries over in their space. And I'm not sure if it's something I'm going to do like all the time. I still think the strat entries make more sense, just overall when trading stocks, specifically when you're trading stocks, because futures tend to have, you can see bigger wicks, and they tend to not trend quite as hard. That's not a steadfast rule. It's just true. Like if you go to ES1, it's like, you can see it's big wicks and it's chop, like for a vast majority. Chop, and then boom, nice big move, right? Chop, then boom, and then more chop, and then big move. So in the futures, I think this makes more sense. When you get to the stocks that are really flying, I don't think it's going to apply as much, but there's still a way that we can get in there that I want to show you. That being said, though, I want to go back to crude oil. And pretty much what he said is when we're looking at it, he looks at this and he sees the candle close back into that range. And the same thing we said before, he wants to see it respect the 50% of this. But what they're doing is once that day has closed, they're going to the 60 and they're looking at, you can see the down close candles that made that low. And this is where the ICT people, they'll call this the order block or a change in state of delivery or demand or whatever you want to call it. People call it different things. But what he said is once prices started to close above that, and then the next day had opened, which you're going to see the next day opens here at 5 p.m., he just wants to see it respect this, right? And we could also technically mark out the 50% of these down close candles and say the same thing about that. But you can see here, they open at 5 p.m. This is 5 p.m. and you can see they respect the last down close candles that they closed above, and then they continue higher. And this is the same concept as if we went on to a lower time frame, or actually if we go here, you're going to see it's the same concept of what I just showed you, where they go lower, aggressively move back into the range, and then we want to see them make higher lows and higher highs back through it. So really simple. So same thing, it's just marking out that level and saying, well, these shorts, and this is in strat terms, these shorts who are in here and short, we want them to continue to be in a losing position, right? So when it comes back in and these shorts go back to break even, we want to see them buying to close, which is how I would think of it as a stratter. And you can see that's what they do. So when we're looking at the bigger time frames, let's see if we go here on GS Weekly. So we go to the GS Weekly, you can see it respects the 50% of that. We have our 2 down week, comes back up. You can see on a 2-day chart, we have the respect of the 50% levels all the way up and through here. If we go to the daily chart, this is where you can see on the stocks, this is where it's a little bit more of a mess in here. If we drop it down in here, I want to show you this. Forgive me. Had a specific thing I was looking for in here. Oh, it was actually on the 4-hour, my bad. So one way we can use this, for example, on GS, we had the 4 hours. So when we're looking at Monday's action, and this is just the 4 hour just because it's so choppy on the bigger time frames, you can see they go into the highs and they set up the reversal back down. This is after taking last week's highs, which were here. We can mark them out. So we've already taken last week's highs. We know this week we want to see it close way higher because of our signal. So when we use the idea of that 50%, you can see we create this hammer on the 4 hour. So we want to see price respect the 50% of that, which it does. And then the next 4 hour, you can see it does close 2 up in red, but since it respected the 50%, you can see we draw the 50% here, and you see it closes above here as well. Awesome, right? So it's still going up is the thought process. Then you can see they respect the 50% here, and they're still going up. Then they take last week's highs out. They do have the 3, which is your broadening formation. And you'll see in here, they then close back above to get you more entries into this, and then up they go. So like really, really simple. The other way that he had shown me is this. And really just with the 50%, that's really all you need. There's not much more you need to add to that. Do you recommend higher time frame signals to prevent the chop or over trading in futures? Yes. That's why futures don't move most of the time, because you need a signal to make it move. Whereas we can scan our signals, and then every week we have new signals across the whole market, which makes it easier. But that being said, we can also use the idea of triangle layout. So in the strat, we have this simple, it's like we're looking for our broadening formation. We call this a triangle layout. And then while this is moving up, if we were to zoom into this price, we know we're looking for price like we were talking about before. Triangle out, keep going, triangle out, keep going. And it's that simple, right? So another way we can do this is we can see, so this was Monday. So notice Monday, they trade up initially. We don't have to be the first ones in is what we would say. If you're doing it like we talked about with just the 50% on the weekly and just buying the open, you can do that. Now, what we'll see is we make the low, and then we have that closure where you go 2 down in green, closing back into the range. We can then just buy it and have our stop the 50% of this wick and just say we're going to hold that, and then we're in, right? You'll see this happens multiple times. In this case, we only had this one down in here. We could say this was the hammer in here, which we could do the same thing here, but it did not close back into the range. It was just a hammer. And it depends on, how you want to trade with this, but it's pretty neat. So you can see the 50% here, you're in, you let it go. If we go to AI, I want to show the same thing. So AI was from the weekend vid. We already showed you guys that with the monthly signal and whatnot. So if we go to the 60 in AI, you will see we have the hammer in here, and then we can manage our risk to the midpoint of that or the low of that, ideally the midpoint, and then we're in. We have the hammer in here as well, closing back into the range. We can use the whole candle, or we can just use the wick since there's a bigger body on this. What T-Trade said is he'd prefer to use the wick. You'll see it test the 50%, then up they go. We go to the 4-hour. Same thing is true. We have the hammer on the 4-hour to get in, manage our risk to the 50% of that wick, and we're in. If we drop it down even lower, and this is where you have to have some more, patience, so to speak. But you can see, so we have this big range in here. Oops. We'll go to the 15, make it simpler. Actually, the 15 is not going to show it in here. Yeah, I guess we can just go through these, make it simple. So you can see the hammer in here. And this occurred on Thursday, so well into the week. Manage it to there. You'll see the same hammer in here. We can manage it to here. There was the 3 in here, 3-2 reversal, which you can do the same thing, managing it to the 50% of that. We will see the hammer in here, which you can see does respect it, right? It gets stuck inside of here, but it does respect it. And then you get an additional one in here where you can measure out the whole candle or just the wick of it, but you'll notice that is also respected. Really simple. And this is why we say with the strat, it's like, you don't have to do the whole thing, right? It's a matter of picking a universe, sticking to that, and then learning to create winning positions. Because this is one way of creating winning positions where he's simply looking for the 2-2 reversal, and he's managing risk to the 50% of that in order to not put it at the low, because that's a pretty wide stop. And you can do this on any time frame. Since we know the 2-2s are going to cause movement more often than not, you can do it on every single one. And even if we go to the ones that fail, so for example, AI, this was Wednesday, Thursday, Friday. The ones that fail, for example, you get stopped out, so be it. When this one breaks, you make all your money back. Get in here, make all your money back, right? Get in here, make all your money back. So it's a matter of having some type of entry that will get you in and just looking for that on the things you should be looking at, which are going to be the bigger time frame signals like 2-2s, like we've been walking through here. And for example, we could go to AVGO, another example. In this case, you get this nice big body. So you can see the 50% of that, you buy the open, up they go. And we did have a lot of people that traded this one the past week. Uber from the macro video. This is a good example of one as well. The hammer closing back in, right? So that's something we want to know about. 50%, and then up they go. giving you your quarterly signal in force, expanding the try that we drew out on the macro vid. So we go in the quarter, there's your 2 down in green, boom, explosion, right? And another way you can think about this is when that signal forms, we want to see them stop guys out first, right? So this stop them out first, the first week of the month, and then the second week of the month, boom, explosion, because of our decoupling and everything we've already talked about in all the videos here. So simply just showing you that 50% of how we can manage the risk and make it simpler, where if you're in there, you don't have to do anything all week. You just let that close out, because green gets greener, as we say. And I can take any questions. A hard stop or wait to close a position. So you wait for it to close. So let's say, for example, Uber, if it did go, let's just draw it like this. So the 50% was here. We can buy it. The 50%, we want to see it respected. So maybe you set an alert there and you say, okay, like when it gets there, what does it look like? And then we can drop to a 60. And when it gets there, we can say, oh, it's a 322 that hits magnitude, and then it closes back into the 3. What should I do? I should buy it. I should buy more, actually. Right? And then up they go. And you can see even today on the 322s, the other thing is, so when there is no big wick, he said, just use the whole body. So here's the whole body for the 322, up they go. And it doesn't look like we have any other ones in here. Position size, up to the trader. You should not put your whole position in one trade. If you are putting your whole position in one trade, it better be a winning trade. It's like AI. What do we say about AI? Well, if that week works, it triggers the month. So what do? We buy the week. You just buy it, put the 50%. We start small because we add to winning positions. Because if this gets greener, guess what? It's going up there, like we said. How much room do you got? You got 36%. So if this works this week, awesome. Now into next week, or not into next week. When that works, notice how the week triggers the month, you buy more. And then it goes into here for the monthly magnitude. Awesome. Now where's your stop? You'd trail your stop. You'd have a soft stop or like an alert set for the 50% of this week. Because if we don't take this out, we're still going up. So what does that tell you? Next week, let's say we open inside day and we start chopping around. If we can get the poke down reclaim, buy more. Third entry, get more. The same way you can see it goes sideways in here. Poke down, then comes back in, buy more. Poke down, comes back in, buy more. Depends on the time frame. If you are like weekly, monthly, quarterly, yearly trader, then you're going to trade the week, month, quarter, and year, right? Maybe you can use the day to try and get more, but our method, no, risk reward stupid. Now, in this case, since you are risking more money, whereas the strat, we wouldn't risk this much if we're just trading straight up strat. What you want to do, and it's not even true, but what you'd want to do is, let's say your stop is $5. You're not going to take a 10,000 share position if you have like a $100,000 account. We don't want to do that for $5. Now, when this goes here, AI, when this hammer on the 60 forms, if we simply buy the open of this candle and manage risk to the 50%, we're risking 20 cents a share. So if you want to buy 10,000 shares, you're going to risk $2,000. Or no, that's too much. No, I think that's right. Yeah, so you'd risk $2,000, right? If you have a $10,000 account, that's stupid. If you're trading with 100 grand, 200 grand, then that's nothing, right? Especially if you're adding, because this is a position we should already have open from the beginning of the week. Because this was Monday in here. So this is all Monday. So by the time it's up here, you should already be up. If you're trading $100,000, $100,000 account, let's say you start off with 1,000, 2,000 shares. Boom, goes up $10 or $4. Or let's see. So it goes up $2, make $2,000. Well, when you take this, if you want to buy 10,000 shares and risk the $2,000 you just made of their money, not risking your own account, risking theirs, go for it, right? And then if that pays off and that works, then you have 12,000 shares going up into here, and then you make, 24 grand, and you risk their money. It's a matter of creating a winning position, like we showed you on the week, buy the weekly open, wider stop, Once the week starts going, those are the ones you add to. Because when this breaks, Monday opened here. When this breaks here, it's up 6% on the week. If it's going up 20% this week, it's got to go 6% first. The same way when we said Futu or any of the China stocks on the Strat Attack list, you'll see this was Monday, Tuesday. It's up 13%. If it's going up 40% this week, it's got to go 14% first. So maybe we missed this part, but we make winning position Wednesday, and then boom, it gaps up Thursday. We can add to it Friday. And then you'll notice, using the 50% in this case, we can manage our risk to a closure below that 50% until that happens. And in this case, what you'll see is they did have a gap down that goes green. So this would be where you'd be forced to close if you're going to be the tightest level of defense. That was the first reversal against in here. Same trade. Yeah, exactly same. Up or down. Silver or gold futures. Yeah, so we actually traded gold. Yesterday we mentioned the inside bar gold and silver. I can show you this here. So gold and silver, you can see we had the 212 day for the reclaim. We also have them on the macro because silver's got the inside quarter. So for example, gold, you will see we go sideways. Then we form the inside bar actionable signal off the lows here. And with what we're talking about, since any actionable signal, you can do this. You'd see, for example, the 50% would be there. So you just buy it and throw your stop here. Once it reclaims this low, we gauge the magnitude to the other side of the range until that reverses. So we're in, let it go until it reverses. And you can also trade silver, same way. There's your inside bar simultaneous break with gold, same way, up they go. If we go to the miners of gold, we also had the 2-2 and JNUG. You'll see reclaiming the lows back through the range. Some profit taking in here. If we go to the gold miners GDX, you'll see the same thing. It's a 2 down in green, so the 2-2 reversal, back through previous range, same exact thing. If you want a steadfast position size thing, let's say you're risking $1 or let's say you have $10,000. You want to be able to make probably 10 trades throughout the week. So maybe you put $1,000 in each trade until you get the winner, and then the rest of your money you start adding to your winners. So you open the week, you buy 3 positions for $3,000, and then 2 of those positions go 2 up again on Tuesday, and therefore you may cut the other one or wait. Maybe it goes inside on Tuesday on that 3rd position. Then come Wednesday, all the ones that went up Monday and Tuesday, you're just going to continue to look to add to those throughout the week. And that's if you're trading on like a day-to-day, week-to-week basis. If you're trading the quarter, the month, the year, the week, then you probably want to manage off the weekly. Because if I'm trading, if I'm trading XLE, oh, I forgot. I have this stupid logarithmic thing. That still doesn't look right. What's going on here? I could have sworn XLE was the inside year. Am I tripping out, guys? Because I could have sworn this was inside year and up in the energies. But okay, so for example, if we're trading energies, we don't want to be on a 60 chart trying to manage this yearly trade. Or at least we ideally wouldn't want to be. Because if we're trading, we have the 2-2 reversal in here. We don't want to mess with our position in here. The only thing we would want to do is add to it on like a month or a week or quarter that reconfirms this year. So we're going on the week. You can see in here on the way up, we can go after the triangle out. So stops them out, goes the other way. Stops them out, other way. Stops them out, goes the other way. Stops them out, goes the other way. We can use that, right? Same thing here, 3-2-2. You see they stop these guys out, go the other way. But what we'd prefer to do is just be in there off the yearly. Maybe you add to it a few times towards the beginning of the year and just let it do its thing. The ideal swing trade, the quarter, the month, the week, all in our favor. Goldman Sachs, for example. Weekly signal tells us to look at it this week. The month tells us to look at it this month, inside month and up. Boom. The year is an inside year and up, so we got it all year. So if you're investing, you want the year. Give me the yearly signal, and we're going to go after it. And if we go to Looks like I'm missing it here. Yeah, you'd have to find it. My yearly macro video, we go over all of that stuff. We can actually go through that. Maybe give us something to do here. Yeah, so 2024. It's an 18-minute video just going through. So we go through the currencies, then we go to SPY. And you're going to see we're talking about the 312 year on SPY. What does that look like for the swingers? What the heck is... Something's wrong here. Because SPY was a 3-1. I know it for a fact. So something is... the data here is incorrect. Oh, so the adjust was on. There it is. We can see 312 year to the upside on SPY. There's your signal. So what does that get confirmed by? Well, it gets confirmed by all the sectors. So we go to the sectors. You see we're looking at Dow Jones just to continue. QQQ just to continue. You see IBM was the 2-2 year with a magnitude 22713. You can see IBM. There's the 2-2 reversal hitting its target. Then we get to the sector analysis now. So we talked about the utilities. I don't know if I marked it out on the charts. But we talked about the potential pivot machine gun in here, which actually took a quarter to set up. This is something we put out the quarterly macro video in the XLUs. So you'll see the pivot machine gun here. The inside quarter to trigger it, boom, there's your quarterly signal. And notice it respects the 50% of that quarter. So the first signal up, then in here, there's where you could buy more if you wanted to. Pretty simple. Financials. You'll see the inside year in financials, and then we go to GS, the inside year GS. So you see, we want to look for that all-time high. Bank of America has the 322. I have to clear that out first. 322. Then we get to talking about the energies. So GS was one of the examples from financials, and you can see there's your 33%. And it also tells you to look at Bank of America, which hasn't been quite as strong, but you can see 13%. And the same thing, 50% from T-Trades. Pretty cool. So the ideal swing looks like give me the biggest signal you have back through previous range, then give me signals to confirm that signal. Because if we go to GS, how do you get in on that? Well, there is, oops. You see at the very beginning of the year, the 3-2 quarter right in there. You want to get in on that. You can see it goes red, but it does not reverse. You see it pulls back, does not reverse, pulls back, does not reverse. And then throughout the year, what are we looking for? We are looking for where they stop people out, nice long red bars to buy against, because the sellers in here are wrong. The year is green. You can see nice red bars to buy against. Nice red bars to buy against. And then this week, nice red bars. And then here's our buy against. Boom, from the weekend vid. Closing the swing, when your signal is done. If the year signal is in force, you have all year. Now, each quarter will confirm or negate the year. So every quarter you want to ask, well, is this going to negate what I know to be true? So for example, and it depends on how close you want to go to it. So this was not a signal in force. It was a 3-2 in crowd, which is still, you can see above the year. You can see they did pull below it for a while. But you'll notice, so they go 3-2. Then you have the nice red bar to buy against. Boom, up they go to the highs. And then they start bringing it back in. They go reversal month. Now you ask yourself, well, is that going to change what's occurring, right? And depending on how tight you're going, it depends. That's what is going to decide, are you getting out up at all-time highs, or are you getting out when it reverses against, right? And ideally, we want the signals where it's like 2 up, slight stop them out, and then 2 up, and keeps going. So when this happens, we just get out, and then when it goes 3-2, we get back in. In this case, what we'll see is you'll notice we had this big range sideways. They make the new highs and then they reclaim the range. This is your first warning sign to get out. Whereas when we compare it to like NVIDIA, you see the beginning of the year here, this was that Rev Strat 1-2-2 to start the year, and then boom. When this pulls back, it's not reclaiming anything. It is going back through this, but it's not really reclaiming anything. What you'll notice is to make the lows. Here's your shorts that you're going to be long against. Take it up. And then up into here. And you see that since NVIDIA is super, super volatile, the 2-2 week does nothing. They try to make the new high, 2-2 week in here. Then you can see this starts reclaiming this stuff, coming back through on a weekly basis. If we go to the month, you can see on the month, it looks like this. So inside month starts the year, 2-2-2 month to get more, 2 up, 2 down reversal, your first warning sign, and then they have the big drawdown. And then the inside month here to try and get more again. So like a winning trade looks like this. Inside, buy. 2 up again, buy. 2 up again, buy. Red and inside, 2-2 against, reduce your position. 2-2 back up, buy more. Buy more. Then 2-2 down, reduce. 2 down again, maybe reduce some more. Inside up, and then buy more. But the important thing to understand is like these signals, when they get moving, it's the ones that you have to worry about, or where like, okay, we get the inside year, it goes like this, and then it pokes up, and then it does not stay above last year's highs. These are the ones you get out of. The ones where you go inside year, and then it starts going, and then maybe you get it start pulling back, but it's nowhere near last year's highs. These are the ones that will keep going because you're not reclaiming the signal. The signal is still good as we are still trading above it. So like when we look at TSM, bright green year, right? We go to the quarter, this really pulled them back in, right? Now what you'll see is they reclaimed this previous quarter's highs, but then they came back above it and they never reversed the quarter. So when that occurred, you'll see it occurred on that gap with Black Monday. But when this is happening, the year signals down here, we're still in force on the year. We still have all year. So now we have this range. When this gap down and starts coming back into the range, we're going to the other side, at least we think it is, right? So we just don't want the ones where we buy it and then it comes back below last year's highs and we get none of it and it doesn't do anything. For example, I'm trying to think. Where's the outside year? No. Like, for example, let's just say it looked like this. So you're trading the year. Let's say you're trading this yearly signal. Goes up. Awesome, right? Winning position. Then it comes back below that. Now you don't have a yearly signal in force. So you're now lacking evidence of a buy this year because it's no longer a signal in force. So this, when it comes back below that, that's when your problem is. If it's still above it, you still have the rest of the year for that to play out. So you can see, for example, the 2-2 reversal. When it breaks that, this continues to get redder, even if it comes all the way back here, but it's still below that. So like if it went down here and then all the way back up, if it's still below that, we can still look to go after it. And I'm not sure what Hershey's looked like on the quarter here. I think it might have been earnings or something. So for example, you can see it goes all the way down, comes back up. You can see they're right against it. But then right here, the inside day down, now they're back to puking. Boom. Right? You can't be scared of this stuff because this is what causes the move down. The big uptrend causes the even bigger downtrend because you're trading in the direction of the bigger signals. So if we're looking at Hershey's and we're too zoomed in, it's like, oh my gosh, it's the end of the world. And it's like, no, zoom out, right? We have this range. You can see we're trying to come back through that. It firms up in here at the inside, or is it what? Yeah, the 3-1-2 reversal. And now they're ready to go. And then the same thing, oh, it's the end of the world, right? Then they firm up again, 2-2 reversal, they're ready to go. And it's because, if we go and take a look, at this point, the yearly open's like right in here. So you can see we're kind of just oscillating against the yearly open. But if you go to the month, this probably isn't the best example because it's a chop shop. lost my spot. I believe it's in here. Yeah, so this is 2020. So you can see they go inside month or inside quarter up, right? It wasn't in force staying above that, so it doesn't go that far, but you're nowhere near reversing that. So when that big puke's occurring down in here, it's not reversing that, right? So it just goes right back up. And then this puke's really hard up in here, but you're not reversing the quarter. It's still going up, and then right back up. And you can see this big puke off the highs sets up a shooter, right? But it never breaks in force, so it's not going down, back up. Like you can see on SPY, for example, these lower wicks in here, they're not reversing anything on the quarter, right? And then this big puke, it pukes from here all the way to this low. It still never reversed the quarter. Then you see it pukes from here to here and then takes the quarter out. And then it starts really taking some of these guys out. Then right in here, you can see it firms back up. Then this is COVID in here. You can see up, potential 3 flipping red, and then it reverses the quarter. And then, you can see we puke and take all those guys out, taking out the pivot target down in here for 18%. And then they firm back up with the new quarter, and then up they go. And then all up in here. You can see how the big puke off the highs, but no quarterly reversal. Right back up. And then 3, that's a reversal. Right, goes inside and then red still, so they're still having problems. Inside and green firms it up and then comes all the way back in because it's still never reversed this. And then notice when it goes 2-2, now it's starting to trend the other way. And then you'll see, since we're an inside year, they poke slightly down, but they never come after any of these guys. They reclaim it right away. So that signal, now we're trying to go outside of that. You can see it goes down again, reclaims again. They're still trying to go back outside of it. Then they go outside quarter, and they reverse it all the way back up. And this is the beginning of 2024. So this is also the yearly inside signal up. But if we go in there, you'll see they initially tried to get back into the range, failed to do so. 3, 2 down, 2 up, and then reclaim, and then this one works. Boom. But I guess for one last thing, we can go in here and we can show you the 50% of all of this stuff. That's pretty neat. See, this is the first one to disrespect it. And this is also another way of pretty much just saying, as long as we're not going 2-2 reversal, it still looks good. In this case, 2-2, and then stop some guys out. You can see the reversal back up. Respects the 50%. Then another uptrend in here. Same thing. Etc., etc. When's the next boot camp? I don't have a date for you yet. I'll have to let you know. I do believe we are going to be putting it on the website. But if you are interested in educational stuff, I'm going to have, or I'm supposed to have, I'm not sure how much time I'll have this week or this weekend, but I'm going to have some mini courses put out on my YouTube channel that you're going to be able to access via a link to StratAlerts, or it might be a separate site. But they're going to be mini courses on just specific strategy, because the strat is a way of making objective the market, like the 1s, 2s, and 3s, continuity, all that stuff. But the strategies are technically infinite, so there's a lot of different ways to use it. It's like one example, this is the second most voted one, was just using the 3-2-2. And this is something, I forget his name, Ace on Twitter, he uses all the time. But you can see, for example, just trading the 3-2-2 on the futures, you get 3-2-2 reversal to the upside. You can see at the close, you also get the 2-2 back down. And you see the day before on NASDAQ, 3-2-2 to the upside, and then right up into there. And this happens not every day, but most days, maybe a couple times a week, 2 to 3 times a week. You're going to get that type of trade. So that's one strategy you can put in with the strat just on the indexes and just trade that and hit it pretty much every time. You can see in here. The 322 at the open, boom. That was at night. You see the one in here, 322, and then blows out the highs for you. CPI had a really good one. Not on the NASDAQ here, but on the ES. You'll see the 322, and on the SPY it actually looked a lot better if we go here. You see the 2-2 reversal, 2 down in green, and then up they go. But that is one example. And there's obviously, so like not every day is that going to happen, but there is setups that we have that occur every week. So like the Strat Attack, that's one we love. And the Strat Attack is things that are in force on bigger time frames, two up to start the week on Monday, Tuesday. It's like AI would fall under that because you have the week and month signals in force. So the way it gets put on the Strat Attack list is this. They buy it Monday, they buy it Tuesday. We have the week in force. So we know we want to go after that all week, right? So when they buy it Monday, Tuesday, it's already green for us, which means we have continuity in our favor. We got signals in our favor. That's a buy. So then come Wednesday, Thursday, Friday, that's when you go after it. You can even buy it on Wednesday, or on Tuesday, to set up the Strat Attack. That's how I would say it. But you can see Wednesday, it was a nice rally. There wasn't many very good entries. There's a Rev Strat in here. That's about it. And then Thursday, this is where we can go after that 2-2 reversal. This 2-2 reversal, get in there, and then the 2-1-2 add, and all the way up in here, and take some profit at the end of the week. And we do that AI. I already showed you Futu as an example of that with all the China stocks. You can see they went up Monday, or actually not Futu, KWeb. China stocks, notice they bought it Monday here. They bought it Tuesday, and then we can go after it Wednesday, Thursday, Friday to buy more of it. And then you can see that big move. We had a lot of gap down buy entries in here, like Futu specifically, where it goes 2 down in green. We go after that and fly them to the highs. There was more examples this week. MSTR, for example. So they buy it Monday, Tuesday. Wednesday was an inside day, so we don't trade that. Thursday, notice they stopped some guys out. So you make the slight lower lows. And then you'll notice, you have like a 2-hour, you'll see this. So they stop some guys out and they close back in. Then you can see Friday, this is where they go after it to buy more. So it's not every single day will they buy it. Most often than not, they will. But this is just an example of that. If we go to Crowd, you can see they bought it Monday, 2 up. It was red, but it did go up. Then 2 up on Tuesday as well. And you'll notice it has the week in force, so we want to go after it all week. If that works, it would reconfirm the 322 month with a momentum hammer on the month. So we can go after it all week, all month. Therefore, Wednesday, Thursday, Friday, we can go after it in here. And in this case, you're going to see that the crazy move and then the hammer 60s in here to get it. This was on Thursday. If we go in here on Wednesday, you'll see the 2-2 reversal on Wednesday to buy it in here. And Tuesday, it would not have been on the list. Could have been off the 60s, but hopefully you're kind of seeing how that works. So you really just go after it Wednesday, Thursday, Friday, and you can expect this type of stuff to happen. And those are 2 universes, and there's way more than that. There is the Gapper universe. This is one I bought today, and you'll see why we did it. Notice the 2-2, and you can see sideways, 2-2 reversal, reclaim. Where is it going? Back up there, hopefully. All right. When that works, it sets up this for next week. So what are we going to do next week? I'm going to buy more if we break last week's highs. I'm going to have my stop down in here, and you'll see the stop is actually where I bought it today on the 2-2 day. So I can just hold my position from last week with a break-even stop, and I should be good to go. If it's really going to get moving, it should just go. There's no messing about. Kind of like this one. Notice the hammer, and then boom, up they go. Is there any other Gapper names today? Bank of America was an example of one. It's not the 2-2 reversals we're talking about here, but the inside day actionable signal 1312 with the earnings. Its earnings are next week, but you had bank earnings today. And when you're playing those dailies right at the open on the gappers, we want to go after those oneers, which in this case, you'll see they had big buy and then 3 slight triangle out and then back in. You'll see the 2-2 in here, the 2-2 in here, and then the rev strat 1-3-2 in here, which got it moving again. And then later in the day, they kind of just sideways. When you see this like really big move in the morning, you might get that measured move like we saw here. Afternoon, a lot of the times they'll just do this, especially when you'll see JP Morgan, same exact thing. They just bought all the banks in the morning and then nothing. Goldman Sachs, which was on our list for the weekend vid, bought all morning and then kind of nothing. They did have a little bit more in the afternoon than most. You'll see some inside 60s, but the gappers. That's about all I got for you guys, unless you have questions you want to chat about. Good stuff. Yeah. But I think the biggest takeaway is just find your actionable signal, use the 50% of that to manage your risk, and go work your job. Because if you do that, set an alert for it, then you can just check on it when it hits that alert and see, is it changing what's happening, or is it going to set up a 60 and go the other way and call it good? Like Hershey's today, I actually should have stayed in it. You'll see the 50% in here. So in the morning, there was the 3 broadening formation, 2 up, 2 down to get back in, and then hold it with the 2-2 reversal here to get more into the close. And we know we want to be there because of the monthly signal, right? So here's your 3-2 shooter month. We want to do that to take out the quarter, and then all these guys who bought in here, they're going to have issues. All right. Well, if we don't have any questions, hopefully you guys enjoyed. We'll probably talk more about this. I know I'm going to implement some of the things next week in my own trading and just see, what happens. I imagine it's not going to be much different because for the most part, what I've done with swing trading is like if it goes up Monday, I buy it. If it doesn't go down Tuesday, I stay in it. If it goes up again on Tuesday, I buy more. And then Wednesday, Thursday, Friday, we're trading the strat tack, which is pretty much simple. How to intraday trading silver? All right, when we answer this question, we'll call it a day. Silver, New York session. Well, first of all, it's a gap up and they buy it, which is not what we're looking for as far as playing or entries go, because gap ups are not made for buying. They're made for selling. So it doesn't mean they can't go on gap ups, right? So the banks do that today, but it's a matter of you need to stop people out. So like notice silver today, they go down. And then in here, the reversal, we want to go after it here. You want to let them bring it back in, stop some guys out, the slight lower lows, and then the reversal, you can go after it in here. And we can do that, but you can see that it's a mess in here. It's not going very far. Now, if we're going to do it, what you'd want is like in the morning when you're going after this on the lower time frames, you want it to get high a day and stay up there. Because when you stay up and out of previous highs, that's when the market starts expanding, going bigger. And so when we go sideways in the morning, we call that a back ender where you get this small position here, it works, comes back in, maybe you get another one, works, comes back in, you get another one, and then you're like, okay, I'm going to come back later in the day. So later in the day, towards the close, you'll see 135. So after lunch for the New York session normally, which New York is an hour ahead, so I believe it's about noonish is when the lunch ends. That's when we want to start looking for them, stop them out to get more positions in the direction of this daily open so that we're above it, right? So in the afternoon, you can see they make the lower lows in here. They had one here, did not work. It did work slightly, but didn't go anywhere. Oops. But you'll see we range completely sideways, slight lower low, and then reclaim. This is the only place we could go after it. And the reason we don't want to do it on the gap up is because when we look at this price action here, this reversal is reversing these guys. So anyone short in here, they have to buy to close. When this gap up occurs, these guys are long the previous day. So potentially they don't have to buy the open, right? They can just kind of let it sit because they're already long, right? Now, when you gap through a range like this, where you can see these guys were short, and they could have stayed short, and then we gap up here. Now these guys have issues. It's like this whole range of traders, they got issues, right? And then that's when we continue the gap. Whereas today, this guy had an issue, but that was it. We didn't trigger anyone else. We didn't take this out, didn't take that out, right? So just not much. If we go to the 60s in here, do you have any 60 signals? 0, as far as we're concerned. Now you have a signal for next week here. But you can see in the previous day, we had the inside bar reversal here, then we had the inside 60 continuation here, and the continuation here. So when we go and look at the previous day, you'll see in the morning, they stopped some guys out, nice big trend. Stopped some guys out, attempted high day, and then they got stuck inside, which forms that inside 60 here. You'll see the slight lower low, higher high, slight triangle day out, and then they trigger the 60 signal in here. Then it gets moving. But as far as silver and gold were concerned, all we said was buy the daily signal and swing it. It's like buy, and then unless the day reverses, we're in. That's how we traded that. At least how we said we wanted to be trading that. 50%. Go and watch the first like 30 minutes of this video. PLTR. I'm gonna have to go and look at my Twitter posts calling the low. But PLTR, you'll see the reclaim. So high, low, slight lower low, reclaim right here, and you're in. Boom. What does that look like on a quarter? 2 down, 2 up reversal, and the 2-1-2 measure to move, which got this going all the way up in here. So the reversal occurred here, going about 200%, and the measure move occurred here, going about 67. So you see about $18 off the lows, and then we're looking for about $18 again, which gives you the all-time highs. But that is all I got for you guys this weekend. Hopefully you guys enjoyed. Alta highs than exhaustion risk. Yeah, but you're going to have this bright green year. But so you got the rest of the year until that year is done. We'll see. But that's all I got for you guys. So if you guys enjoyed, we will see what happens. I'm going to mess around with it next week myself. And I hope you guys have a great rest of your weekend. I'll see you guys in future videos and live streams. Adios.